In this video, we will see how to invest in options, especially for our stock track project. We want to know how to invest in options, and let's see how to invest in options. I want to do two things. First, we have gone over a bunch of theory from chapter 15 and chapter 16 in your textbook, and now we want to apply this theory. The first step is first demonstrate why options are a compelling investment. Okay, that's the first step. And then second, we want to figure out how to get some ideas, how to get some investment ideas as far as options are concerned. Okay, so let's start with step one. We want to know why investors invest in options. Okay, so we go to Yahoo Finance, and let's see today's most gainers. So if you go to Yahoo Finance under markets, if you click on markets, you can see gainers today. Okay, the most active stocks for today. Okay, I'm just waiting for the results. The market is open right now, so there may be, okay, as you can see, these numbers are changing as we speak. Okay, so the most gainers today in terms of stocks are the following, and I am going to sort them by percentage change today. Okay, so I click on percentage change, and then these results are sorted. And among these, I want to look at, so it looks like some stock, Indivior, went up by 18.77% today. So it's a pretty nice jump for this stock. In just one day, the stock gained 18%. Okay, the market cap for this company is $3.38 billion. Not all stocks may have corresponding options, but normally big stocks, okay, for example, I'm looking at a big stock. Okay, so this is a big stock. Deutsche Bank has $25 billion market cap, and big stocks normally have corresponding options. So I want to know if there are any options for this Deutsche Bank and how these options are performing. So keep in mind the stock went up 8.01%. Okay, so let's click on Deutsche Bank, and the Deutsche Bank stock summary opens up. Okay, this is the Deutsche Bank summary. It went up by 8%. We just saw it. Let's look at the options for Deutsche Bank. Okay, you find options here in this tab. So it's loading options. After the options are loaded, you will find a screen like this. We want to look at the straddle options. That way we can see calls and puts simultaneously next to each other, calls and puts. Okay, so looks like these are the calls and puts for Deutsche Bank. The expiration date is July 20th. Today's date is July 13th. Today's date is, I'm just checking the date today, July 16th. So we have 4 more days before these options expire. Okay, so it just has 4 days, and this is the stock that went up by 8%. Let's see what is the percentage change in these calls today. Okay, so looks like these calls went up by 50%. So today, so you can see the stock went up by 8%, whereas the options went up by about 8%. So a big move in the options. So normally what we see is when a stock goes up, the corresponding options go up a lot more. I got the screenshot from a few minutes before, and this is what it looked a few minutes ago, okay, before the markets closed. The Deutsche Bank stocks, it gained 857% today. So this is a really huge move. Okay, when stock is going up by 8%, the options are going up by 857%, 250%, etc. So this is one reason why investors especially the ones who have a very good idea about what's happening with the company. Okay, they know what's happening with this company because they have probably been following this company for a very long time, and they know that so some news is going to come up, and when they are highly certain that it's going to happen, they may invest in short duration options. Okay, these options are going to expire in 4 days, so if they are wrong, then they don't have a lot of wiggle room. They'll lose all the money in just 4 days. But if they are right, they'll make a huge killing, okay, a huge profit. So this is for a company that is going up. So let's look at a company that is going down. Okay, now I'm going to go back to the stock screeners, and we're going to look at the losers for today. Okay, the losers for today are looking like this. These are the losers for today. I'm sorting on percentage change. Looks like these are the biggest losers for today, and the ones that are fairly big are, I'm looking at a big company that lost money today. Marathon Oil lost 6.7%. Okay, so maybe something happened and they lost 6.7%. And let's see how the options are doing for Marathon Oil. Okay, the company is losing big time today. Okay, these are the options for Marathon Oil for today. Okay, I'm going to click on percentage change for puts, and you can see Marathon Oil's puts went up by 1,800%. So this is what most of you may not realize. When the stock is going down 6%, many of you may think there is no investment opportunity, but you can actually invest in the puts of this stock, and you can get 1,800% a single day profit. So that is one reason why options are a compelling investment. Okay, you are going to make, so basically huge leverage. There's huge leverage effect. Leverage effect means if the stock goes down a little bit, then the corresponding options are going to go up or down lot more. Okay, so the leverage effect takes place. There's a huge leverage. And then the second opportunity is whether stock goes up or down, there is always an investment opportunity. Okay, investment opportunity. So the stock is going up, you're going to buy calls. Okay, you're going to buy calls, and if the stock is going down, then you're going to buy puts. And in both cases, you're going to make a huge profit if you are investing appropriately. Okay, that is one reason. Now that we are convinced that who doesn't like 1,800% profit in a single day? Okay, so everybody likes this kind of stuff. That is one reason why sometimes people get into trouble because they try to get inside information from companies, okay, so that they can buy these short duration options and make a killing in a very quick time, a very quick span. But insider information, as you know, is you cannot trade on insider information. It is illegal. So the person who gives information as well as the person who is receiving information, they are now going to be involved in some a possible jail term. Yeah, insider trading, etc., is not at all recommended. Okay, so now how do we know which companies are going to do? How do we figure out these companies? Options normally move when there is a big news announcement. The news announcements are typically company has missed earnings, or the company has beaten its earnings, or some major product launch is announced, or a company is missing, its product is not doing as well as everybody expected, or the company CEO is resigning abruptly for various reasons, okay, or the company is getting into a huge, someone is suing the company for some huge undisclosed losses or some malpractice, etc. So these are all some sample events that are going to move the company's stock price, and when the stock price moves a little bit, as you know, the options are going to move even more. So we want to know ahead of time, a little bit ahead of time if we can figure out these things. So one good area where we can look for is something called earnings calendar. There is a earnings calendar which you can find by Google. The best place is to Google for earnings calendar. When you Google earnings calendar, one of the results is coming from NASDAQ. This is a good website. So let's look at NASDAQ earnings calendar. Okay, so looks like these are the companies that are going to announce results this week. Today is July 16th, and today all these companies are expected to announce their earnings. Bank of America, BlackRock, etc. A lot of big companies are announcing their results. Okay, the consensus EPS forecast is 0.63 cents. So all the Wall Street analysts, apparently there are 7 Wall Street analysts who think Bank of America is going to announce today a 63-cent earnings. In comparison, last year's earnings per share is 46 cents. So if Bank of America's current quarter's earnings, if it is going to be significantly more than this number, then the stock is going to jump. And if the stock is going to jump, then you know the options are going to increase. So if you're looking at options that are maturing before 7:20, you may want to look at these companies. Okay, there are several companies announcing earnings every day, and you can look at these companies. Okay, the first, so tomorrow, July 17th, we have Comerica, CSX, Fidelity. All these companies are announcing results, and you can also see what the expectation is. Okay, so let's look at one such company, maybe on July 18th. That way you have 2 days to get your act together for demonstration purposes. So let's see Alcoa. Alcoa, ticker symbol AA. They are expected to have $1.35 of earnings per quarter. There are 5 Wall Street analysts, and this is the consensus average forecast. There is another website called Whisper Number. Okay, there is another website called Whisper. We call them Whisper Numbers. Whisper Number means it's not as official as this Wall Street analyst forecast, but okay, so you can see the Whisper Number website. What is Whisper Number for Alcoa? Okay, Whisper Number for Alcoa. Okay, let's look at AA is Alcoa. Okay, they want us to have subscription. Okay, so unless you are a subscriber, you may not get this information. So I googled again for Alcoa Whisper Number, and the Whisper Number for Alcoa is coming from another website. Okay, again, this may or may not be true, but at least it gives you some information. If you want more reliable information, you can subscribe to these other websites that I just showed you, websites like that. Okay, so this is a free information coming from earningswhispers.com. They are saying the consensus is $1.35. Okay, the consensus is $1.35 for Alcoa, which is true, and the earnings whisper for this company is not available. Okay, for some reason, Whisper Number is not available. Okay, now maybe I'll try one more company. Okay, I tried the next company, American Express. The consensus is 183, and earnings whisper now is, okay, the Whisper Number, same website for American Express, ticker symbol AXP, is saying that the Whisper Number is $1.87. So this is kind of interesting. Even though Wall Street analysts are saying 183, the Whisper Number is, people expect that the actual earnings is going to be more than the earnings expectation from Wall Street. So if actually American Express announces a earnings of $1.85, for example, then the stock may even fall. Even though it's more than 183, the stock may even fall because the Whisper Number is $1.87. So a lot of people inside the markets, they're not Wall Street analysts, but they're all expecting $1.87 to be the actual number. Okay, so if the actual announcement beats this $1.87 whisper number, then the stock can move up. So now the question is, okay, there is no free lunch or easy lunch in investments. So now you have to do a lot of homework and figure out if American Express is going to have a quarterly earnings of more than $1.87 or not. Okay, to do this kind of analysis, you certainly have to follow this company for a while. There may even be some kind of chat rooms, news groups where investors discuss the pro forma financial models, and some kind of, you may even have some very detailed information about this company's products and segments and geographies, and you will have a good idea about how this company's profit cycle works and what is the earnings forecast. It is not as easy as you think. You need to do a lot of work to get a quarterly earnings number for a company. Okay, then you can wait until the date. Okay, the date is American Express earnings are going to be announced on July 18th, and then see what the actual number is. This is good exercise for you also to see what actually happens. Okay, on July 18th, this company is going to announce its earnings and see what the actual number is, and then you can look at the stock movement as well as the options movements for this company. Okay, so let's look at American Express stock now. Let's say you are convinced. At this point, let's assume that you are convinced that the actual earnings is going to be way more than $1.87. Let's say you think the current earnings is going to be $2. Okay, that's your belief based on your research. Now let's try to look for these options. Okay, we go to American Express stock on Yahoo Finance and look for the options. Okay, these are all the options. Let's look at the straddle. Okay, so they're expiring on July 20th. Okay, so we are, now the question is, what exercise price are you going to pick? Right now stock is trading at 169. If you think the earnings is going to be $2, then the stock price is going to jump, and let's assume that it jumps to at least 102 or so. Okay, so this is what you are betting on, $102 strike price. Right now this option is this call option is trading at $1. So today the option went down by 44 cents. So looks like investors don't believe that the stock price is going to hit 102. That's why they are probably they are getting out of this option. And whereas you believe that the earnings is going to be $2 and you are betting that the stock price is going to go up, so you're going to buy this option for $1. Okay, now so if you are right, then this option may go up very significantly and you can make a whole lot of money. So how do we buy this option now, this $102 strike price expiring on July 20th for American Express on StockTrack? So let's now get into StockTrack. Okay, I logged into StockTrack account, and after you log in, let's look for trading. We are done with stocks and we're done with bonds, and now we are looking at options. Okay, so options. Okay, action is buy to open. We don't have any position, so we are buying to open a position in AXP. Okay, American Express. We are interested in call option, and the expiration date is 20th. Strike price is 102, what we just looked at. Okay, so looks like today's stock is trading at 102. $0.69 on $1.69. Okay, we just saw that the option is trading around at $1. Okay, so if you are interested, you can buy this option. How many options do we want to buy? Each contract, okay, as you saw in chapter 15 and 16, each one options contract corresponds to underlying 100 stocks. Okay, so if you buy one option, it's equivalent to buying 100 underlying stocks. So let's say I am interested in buying maybe 10 contracts. Okay, market, I want to buy it at the market price, or you can choose limit and specify the price here. Okay, so I'm picking the market, and it's now tells me that if I have $1,140, I can buy these 10 contracts. Okay, so that's as simple as that. Okay, you can click on preview and you are all set to go. Right now the options market is closed. You can add a comment. Okay, you can add some comment. Okay, my first option to my first call option to buy 10 AXP contracts. Okay, you may also want to say because I believe AXP will beat Whisper number of, I think the Whisper number was for AXP, it was $1.87, number of $1.87. Okay, buy is going to beat by 13 cents because we think it's going to be $2. Okay, so you can add some comment like that, and when you're all set, then you can just confirm it. When you confirm with $1,100, going to buy 1,000 underlying stocks on AXP. If you're right, okay, the stock price can go up, and your option is 1,100. Who knows, may turn into 2,000 or 3,000, and if you're really lucky, it may even turn into $10,000. No one knows. But if you are not lucky, you can lose practically all the money, because these options are going to expire by 20th, right? And you don't have a whole lot of time. You have just 1 or 2 days, and you can lose all the money. Okay, that's pretty much about investing in options. I know this video is a little long compared to stocks and bonds, but given that there are so many dynamics involved, I wanted to spend some time. Okay, now you can think of doing the opposite. Let's say if you think American Express is going to tank, okay, so you can buy an option instead of okay, so now you're going to buy not calls, okay, but you're going to buy American Express will buy put options. Okay, put options with expiration date of 7/20. Strike price, let's say you think the stock is going to tank, but right now it's trading at $100, and you think it's going to tank to $98. Okay, now you can buy 10 contracts again based on the market price. Okay, and looks like, okay, with $750 you can buy put options on AXP for the same expiration date, $98, same number of contracts. Okay, so the option is yours at this point. What I mean is either you can buy 10 options on American Express for $750, these are put options, or you can buy those 10 call options on American Express for about $1,100 or so. Okay, it depends on what you think is the actual result going to be, actual earnings result going to be in a few days. Okay, you can look at the actual announcement on 7/18 and learn from the markets. Okay, I stop here, and with this we are done with investing in stocks, bonds, as well as options.